In case of a company which is a manufacturing unit based in Uttar Pradesh, so the company heavily depends upon skilled workers who are coming from the eastern UP side. But however, what has happened due to the developments near the villages of those workers, skilled workers, many of the workers are not opting to join the company and rather they want to work near the villages. So there is a significant shortage of the skilled labor, and the company is not able to meet its commitment. It is losing its order from the customer. These are the some issues which the company is facing. Further, their company is not able to pay the creditors on time. There's a liquidity crisis which is faced by the company. So these are the issues which the company is facing, which is like say giving rise to what you can say a circular reaction. They are not able to meet the orders, they are not able to realize the money and other things. Now, in such case, actually, what happens? How do you deal with this scenario, and how does the management allay the fear of the auditor in this regard? If you see the series of events, say for example the company is unable to pay the creditors, unable to run the operation, there's a shortage of labor, there's a liquidity crisis in the company. Now this is nothing but they are the examples for events or condition that may individually or collectively may cast a significant doubt on the entity's ability to continue as a going concern. So entity may not continue as a going concern. So that's the thing here. Now, in such case, see, going concern is a fundamental accounting assumption as to whether the entity will be able to continue in foreseeable future. The auditor must obtain sufficient and appropriate audit evidence as to appropriateness of management use of going concern basis of accounting for the preparation and presentation of financial statement. The auditor should also obtain sufficient and appropriate audit evidence. They have to obtain a sufficient and appropriate audit evidence as to the what you can say as to the any what you can say material uncertainty on events and condition that causes significant doubt on the entity's ability to continue as a going concern, and the impact of such going concern events on the financial statement and audit report must be considered by the auditor. Now, when auditor comes across these kind of situations where revenue is continuously falling, company is defaulting in payment to its suppliers, okay, and company's profitability is continuously falling, so they will definitely raise a question with the management. Now, management, they will address the auditor's concern by preparing a what you can say a future plan of action. So management future plan of action, that's the thing. They'll prepare a management plan of future action, that's the thing here. So MPFA we call, so management plan of future action, that's the thing here. So they'll ask so management will prepare a future plan of action. There'll be a cash flow forecast which will show the cash inflow and outflow in the future. That is projections, it will have projections and forecast. So the cash flow forecast basically it will highlight that okay, we can address the liquidity in future in this manner. The company will generate the revenue in this manner. Company can raise the funds and they can invest more and they can come across this crunch. That's what the company can address. So here, when the management plan of future action, like by way of cash flow forecast, is issued, in such case, what auditor should do? Auditor should perform procedures as to evaluate the reliability of the underlying data, whatever data they have used to prepare the forecast. They have to check the reliability of the data, and they have to determine that whether the assumptions which are made these assumptions are reliable in nature. So one is the source data is reliable, and second one, the assumption made is relevant and reliable. That's the thing here. So the auditor should also consider additional facts of information, which the facts or information which have become available basically here when the management has made any assessment. So what are the any additional facts, information which supports the claim of the management? we are facing the cash crunch, we are facing the issues, labor problem is there, profitability is going down, all these things are there. But what is our plan of future action, the management plan of future action, that has to be considered actually. So this is the thing here, which is also known as the future plan of action of the management. So you have to consider that and accordingly highlight to the auditor. And as an auditor, I should not consider the management plan of future action just like that. Okay, so you have to go through the cash flow forecast. What are the assumptions which are being made, and what is the data which is being used? Is the data reliable? Is the source data correct? That is what you have to ascertain. Okay, so these are the procedures to be applied by the auditor. I'll see you in the next video.